Okay, and welcome back to another installment of IJS Speaks. Today is November 23rd. It's 10:20 p.m. Eastern Standard Time, and this is your neighborhood financial economist, Katie Mark. So we're gonna jump right into it today. Before we even jump into it today, I did not do any recording on Friday, so that's missing from the timeline. But just to recap, um, going into the end of the last trading session on Friday, I uh, I I was down to just the actually no, I had my futures position still on. So the euro, U.S. dollar futures, and the corn futures. Going into it on Friday. Yeah, on Friday I was able to close out the 10-year position. Oh, and also the dollar Canadian also held on to that position going into the weekend as well. Towards the end of the trading day on Friday, the dollar Canadian was actually just at break even. I was able to close out one leg of the corn trade. The I That was profitable. I closed out one leg of the Euro US dollar futures trade. That was flat. And going into the week, and I was able to offload the call side of my US 10-year Treasury options trade as well. The put expired worthless, but the call I was able to salvage. I was able to salvage some of the value left in it, so I didn't have to forfeit the entire premium, which is good. So going into the weekend, the trade book just had the dollar Canadian position, my short corn position, and my short euro US dollar futures position. So fast forward through to Sunday evening, markets open, nothing much happens. But then I wake up Monday morning. This morning, it's fairly early. Just after the open of London, and the positions are down. uh, Over the weekend, nothing changed fundamentally, so there really was not I could not justify going in and making changes with just one trading session underway, especially because there were no changes fundamentally to the market narrative. Um, but for I'm assuming associated to some kind of data release or news release in the American session, we saw a sharp reversal in the dollar. It corresponded in gold. Didn't see much of a move in other markets. The only thing of note, crude oil maintains its strength. Kind of an oddball, but the momentum is there. So for the energy traders, there is momentum behind the long crude oil trade. Not really sure how that spills over into the rest of the energy complex, but as of now, crude oil is showing a bit of resilience in terms of price appreciation. Looking at the rest of the dashboard, no real clear signals one way or another from the dashboard. And this is at the end of the U.S. session, going into the Asian session. I did not initiate any new derivatives positions this week, or at least as of yet, simply because I'm not really getting a clear sense of direction from the dashboard. So overall, what I'm seeing, the move in the dollar earlier in today's trading session. I can see the corresponding move in the in gold, but that's about it. And that move in the dollar also, I was able to take profits on the dollar Canadian position, because the move up in the dollar meant that there was a relative move down in oil. So even though both oil and the dollar were up today, the dollar was up more than oil on a relative basis. So that means that the dollar appreciated more on a relative basis than the Canadian dollar today, and so that long dollar, short Canadian dollar trade, I was able to close that one out profitably. Last Friday, just as a note, the moral of last week's trading week was, when in doubt, take profits. For me, I missed an opportunity, point blank, with the 10-year position. So apparently overnight, when the news broke about the disagreement between the Treasury and the Federal Reserve about what should happen to some funds that were allocated for emergency lending around COVID and blah, 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 blah. Long story short, there's some public disagreement, and that caused a spike in markets, but more specifically in the 10-year Treasury price. And I had 2 call options and 1 put option on the U.S. 10-year Treasury going into last Friday's trading session. The positions were up at the start of trading in Tokyo. Missed the opportunity to capitalize on that, and had to settle for a small loss by the end of the trading session of New York. So just as a side note to all traders, experienced and not so much, when in doubt, take profits. A bird in the hand is worth 2 in the bush. Yeah, if you're up, and you're running out of time in your trading session, especially the options traders, yeah, go ahead and take profits. You can always do it again tomorrow. But so that was the end of last week's trading session. So no new options positions as of now, because again, no clear sense of direction, sentiment wise or otherwise, from the dashboard. I did get to offload the Euro US dollar futures position, like I mentioned. So I'm basically just sitting on the that March 2021 contract on corn that I'm shorting. And I actually had an opportunity today, because I saw a bit of a channel forming to hedge a bit of a reversal, and I was able to take profits, take a small profit, but profits all the same on the hedge in a quick trade late in the New York session this afternoon. But other than that, trading has been very light. Basically, my objective right now, going into the rest of this week, is to manage the corn position, manage that off the trading off the trading book towards the end of the week. If not, it can carry forward, because with the futures contracts, the time to expiration on the contracts are a lot longer than typically with the options contracts. So, but I still feel like with the macroeconomic environment that we can expect or anticipate weakening demand for commodities going into the end of the year and into the start of next year. And I think that among others, corn, wheat, and probably soybeans would see some price depreciation. That trade probably won't accelerate or even gain significant momentum until the price of oil turns around. Gold as a commodity is already showing weakness, but crude oil again has just been unexplainably resilient in an environment that the macro fundamentals really do not support higher oil prices right now. But again, markets can remain irrational a lot longer than traders can remain solvent. So, regardless of what the fundamental analysis says, the technical analysis says that oil prices are there's momentum behind the trade, and if there's momentum behind the trade, then ride the wave, right? Yeah, because so I'm looking at the dashboard zoomed in on crude oil, and both the momentum and the trend on crude oil are positive from the point of view of the linear regression slope. And I'm looking at let's see, the most recent pivot point as highlighted by the indicator is beneath the price, so it has support from at least the pivot point indicator standpoint. Also, the parabolic stop and reverse is beneath the price, which is indicating, and rising, which is indicating rising support levels under the price. So yeah, overall, the technical picture on crude oil is positive. Expect more price appreciation in oil. Now, if there is some kind of reconciliation in markets, then we may see crude oil adjusting to that. But at the same time, the S&P is a risk asset category, is also showing a little bit of resilience. So, in all honesty, gold with its recent depreciation looks like the standout. So let's see. We have stocks and we have energy commodities all pointing higher, and we have the 10-year showing a little bit of weakness. So those three are lining up. Weakness in the 10-year, and simultaneous strength in stocks and energy commodities would suggest a risk on sentiment. But then I'm seeing strength in the dollar and weakness in gold, which would signal a risk off sentiment. So I guess the disconnect going into the Tuesday session would be gold and the dollar. So Tuesday into Wednesday, traders can expect some sort of reconciliation as these markets come to terms with the fundamental picture. And there may be trading opportunities as these markets realign, either risk on or risk off. Not sure yet, but there should be trading opportunities as these markets realign, as they tend to do towards the middle of the trading week. So Wednesday into Thursday. So in the interim, I'm watching corn. I've got channels set up, and whenever it's at the top of the channel, my net exposure is short. So whenever it's at the top of the channel, I am net short, and whenever the price makes it to the bottom of the channel, I reinstitute my hedge and wait for the pullback, take profits on the hedge, and keep the trade going. So that's my approach for corn right now. It's the only thing that I'm actively trading, but I am keeping an eye on the dashboard, looking for some kind of realignment within financial markets, and from there, depending on what the pricing looks like on derivatives, I may look for a straddle position, which basically just it's a play on volatility. So whenever there's no clear sense of direction in the market, but a reasonable assumption that there's volatility baked into the market, then straddles and strangles, I think, can work out well. And especially if you time your purchases of the call side versus the sell side, you can adjust your break even lower by timing it, because as I mentioned in a previous recording, when the price is rising or accelerating higher, your calls become more expensive, but your puts become a lot cheaper. And vice versa, when the price is falling or accelerating lower, your puts become more expensive, but your calls become cheaper. So if you can time the entry of your legs into the straddle or strangle position, you can actually reduce your break even, tighten that spread up, and increase the chance of your trade closing out in the money, or at minimum, if it's a trade that you have to net a loss on, you get to minimize your exposure by tightening up the spread between your strike and your break evens. So on that note, I'll go ahead and wrap it up. So for any questions, comments, or concerns, you can reach out to me through social media, or just email me at contact@runthenumbers.biz. That's contact@runthenumbers.biz, and I will try to either answer your question via email, or address your question, comment, or concern in the next episode. And on that note, have a good night. Good luck in the markets. Happy trading. And remember, when in doubt, take profits.